So I want you to look right now how Form 1120W actually looks like. So we're speaking about the estimated tax for corporations. So what you want to do here is that you want to put the exact dates and year. And on line one, you have to put the taxable income expected for the tax year. So of course, we're speaking here about tax year 2022. So $10 million on line one. And on line two, you go 2.1 million. Line three, you have 600,000. Line four, you have 1.5 million. So everything actually that depends on the calculation that the calculation instructions that the IRS has put on this form. And other taxes, if applicable, we put for this hypothetical situation, we put $100,000. So when you actually calculate all the total tax, on line six, you have a 1.6 million. And if there's any credit for a federal tax paid on fuels and other refundable credits, we have put 100,000. So the total tax due here is 1.5 million. Okay, and so you have to put on line 98 the tax shown on the corporation's 2021 tax return, so that this will be Form 1120 for last year, so 1.2. So the delta here it will be discussed later on. Okay, so 1.2 million, and so you put the smaller of 1.5 or 1.2. So this amounted to 1.2 million. And so here we are putting on line 10, you have to put the installment due dates because corporations have to follow a specific installment schedule. So in our case, it was April 15th, June 15th, September 15th, and December 15th. And you actually have to put the required installments. So not just the date, but also the amount that you have to actually send to the IRS. So in our case, because we had 1.2 million, we actually just divided this by 4, and we had 300,000 grand every quarter. One thing I want to say here is that when we talk about Form 1120W, it's really a matter to actually, it's really important when it comes to tax planning. You are trying to reduce your tax liability at year and also reduce your penalties for underpayment. And this is important, or late payment for that matter. So you have a clear idea how much cash flow you should actually allocate to tax payments. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now I want to show you Schedule A. So you can see on the screen here, Schedule A, adjusted seasonal installment method and annualized income installment method. And this is not applicable to our hypothetical situation here. So I'm just going to skip this. But I wanted to show you this so you have a clear idea what's really possible with Schedule A. So I'm going to leave this on the screen for a few seconds. Then we go to the next one here. So the form actually continues. So from line 11A all the way through line 19. So again, this is not applicable to our hypothetical situation, but I wanted to show it to you just in case. And part two is really what where all the juice is at, so to speak. And so this is where we had to actually fill out. And so part two is the annualized income installment method. So basically here you are telling the IRS how you plan to pay for your taxes. So you can see here on line 20, first 3 months, first 6 months, first 9 months, and first 12 months. So we basically the taxable income for each annualization period here is 10 million, 10 million, 10 million, 10 million. And the annualization amounts here go from 0.25, 0.50, 0.75, and 1. And so basically, correspondingly, the annualized taxable income is 2.5 million in the first quarter, 5 million in the second quarter, 7.5 million in the third quarter, and 10 million in the fourth quarter. And so there are no extraordinary items in our case. And so when you add lines 23A and 23B, you get the same amount. So you have 2.5, 5, 7.5, and 10 million. And so the tax that you actually owe here comes to 525,000, 1,050,000 grand, 1.575, and 2.1 million. Okay, and so from line 26 all the way through line 31, the explanation is pretty self-explanatory. So we're going to leave this on the screen so you actually can go through the math. But basically, the thing is that you just have to follow the instructions that the IRS put on this form to calculate the amount you should be putting on line 31. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 1120W. And I want to show you right now on the screen part three. So when we talk about part three, we are speaking here about the required installments. And it's one of those things where basically, again, when we talk about Form 1120W, we're speaking about tax payments. And so for time's sake, we will not cover part three. And if you have any questions, please let us know in the comment section below. And one of our team members will get back to you and explain in all granularity what you need to really understand when it comes to part three. Now, one thing I want to say here is that it's really important when you plan your Form 1120 and you are trying to, let's say you're filing your Form 1120 or 1120S, and you're trying to really think about tax planning in general and tax preparation, you need to always allocate some kind of cash flow to actually comply with your tax obligations. And if things are a little complicated for you, if you're listening to me right now, it's just a lot better to outsource the preparation of this form 1120W to a professional. That way, you really can focus on running your business. And we actually advise all our viewers and business clients to reach out to a CPA, a certified public accountant, or an EA, an enrolled agent, or a tax attorney to actually help you out. Now, just make sure that tax professional has experience in dealing with tax and preparing taxes for the specific industry that you're in and the specific sort of configuration that you have. And so it's just better to reach out to somebody local. It's just a lot better. You can go to that person's office. You can sit down with them. You can have a conversation. You can provide all the data that's needed. That's number one, option number one. Option number two, you can always also use a tax preparation software. So, from Tax Act all the way to TurboTax or H&R Block, you have a lot of tax software tools out there that can actually help you out in filing Form 1120, Form 1120W, and all the ancillary schedules. And one thing I also want to say before closing to this conversation is that you need to understand that you got to have a proper paper trail for every sort of expense that you are actually claiming on this form here. So because again, you want to be ready if you were ever to be audited, that you are able to provide the right information to the IRS. Let me give you an overview here, and I want to explain how corporate estimated tax payments are made, really. And so let's go back to the origins here. So what is Form 1120W? So Form 1120W is actually it's a tax worksheet used to determine required installments of estimated tax payments for corporations. So Form 1120W is different than Form 1120 and IRS Form 1120S, which are used to file annual returns. Okay. Now, who should make estimated tax payments via this form 1120W? Well, if your business is structured as a corporation and expected to make income that would exceed $500 in taxes per year, income tax less credits, you should use Form 1120W to estimate your quarterly tax payments. And some estimated payments made by S corporations are filed on Form 1120W, while C corporations use IRS Form 1120 to file tax returns. And S corporations should see the main IRS Form 1120S for instructions to determine if they need to make any payments on Form 1120W. Now, one thing I want to say here is that when we talk about 1120W, you have to understand it's all about what really relates to your specific corporation, especially when it comes to estimated tax payments. Okay, and completing Form 1120W is important as a corporation owner because it helps you calculate your estimated tax payments. And completing this form matters because it helps regulate your cash flow. That's what I was telling you earlier. And while also making sure you stay on top of your tax obligations. And it's one of those things where you are, again, able to do things and plan things in advance and have a clear idea what's really happening. So the form itself is pretty self-explanatory in terms of all the instructions. You got to multiply this by this. You got to multiply. You got to subtract. You have to. So yeah, this is pretty straightforward. But there is one thing you need to really understand that when it comes to the installment method, you have the adjusted seasonal installment method I showed you before. You have the annualizing income installment method, and you have the required installments. And in our hypothetical situation, we use annualized income installment method to sort of go through the payments. I mean, it's just for sake of simplicity also. But again, if you have any question, let us know in the comment section and we'll certainly answer you. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 1120W. So if you have a corporation, in other words, let's say you have a C corporation or you have an S corporation, there is a specific calendar you need to follow through, okay? When to make estimated tax payments. Well, the thing is that those tax payments are due April 15th, June 15th, September 15th, and December 15th. So every quarter, those are called estimated quarterly tax payments. And every quarter you have to actually make them, okay? And it's one of those things where you actually, you have several ways to actually make your estimated tax payments. Corporations must use electronic fund transfer to make all federal tax payments. That includes estimated taxes on Form 1120W. Now, if for any reason you do not have access to EFT, in other words, there is actually an official platform where everything happens. Is actually called EFTPS, so Electronic Federal Tax Payment System. This is actually a free option from the Department of the Treasury. And but so you have the one option there, and you have other options. So, for instance, you have a wire transfer, or you can have a third party initiated electronic deposits. So, in other words, a third party does a deposit on your behalf. Totally possible. Any form, any sort of pattern you can use to satisfy your tax obligations, please do it. Not a problem at all. And it's one of those things where you have to understand that you are ultimately responsible for filing your taxes and also making payments on time. But it's one of those things where if you don't have the expertise or you don't have time to actually file the paperwork yourself, it's always better to outsource this to a third party, a professional who has expertise in filing this kind of forms, okay? And one thing we have found also is that if you do not want to hire a CPA or an EA or a tax attorney, you can just use software. And in some cases, some of those software providers, they also have a unit within their company where they allow you to actually file your corporate taxes, and they have experts who can really assist you. I mean, H&R Block does have that, TurboTax does have that, Tax Act does have that. So they have a team of in-house experts who can really help you out in case you are using their software and you want to go a little further to file your your corporate tax returns. One thing I want to talk to you here is that when we talk about calculating and paying estimated corporate taxes using Form 1120W, it's all about estimating your tax liability and calculate your quarterly estimated tax payments. It's one of those things where, of course, I'm telling you here about the federal side of things, but also there is a state component that also has to be taken into account, right? So basically, the same way you have to estimate your federal tax payments, you also might need to estimate your state tax payments. But again, every state is different, so you're going to have to actually refer to a state tax authorities to have a clear idea what the rules are in your specific jurisdiction. One thing I want to say here is that, and I think I've said this before, but I want to remind you again: C corporations that expect to owe more than $500 in taxes for the year must make quarterly estimated tax payments. Limited liability companies that have elected to be taxed like C corporations must also make quarterly estimated payments. Okay, if you do not make estimated payments when required, the IRS will assess an underpayment of estimated tax penalty and charge interest on that penalty. So this is kind of crazy. You do not want to go there. Now, S corporations don't use Form 1120W since an S corporation is a pass-through entity. If shareholders use Form 1040ES to calculate estimated tax payments, then everything is fine. Okay, and so it's one of those things where you have to really see what applies to your situation specifically. One thing I want to say here is that when we talk about Form 1120W, things are pretty simple unless you have let's say a quote-unquote complicated tax structure. But if you have a straightforward C corporation or ALC who elects to be taxed as a C corporation, you should be able to fill out Form 1120W real fast. But the most important thing I want to make sure is that it's all about cash flow management. It's all about making sure that your cash inflow matches your cash outflows, so you have a clear idea that you'll have enough cash to actually satisfy your tax obligations. Otherwise, listen, good morning, all the penalties and everything else. It's one of those things where you have to have a clear idea what really applies to your situation. One thing I want to say here is that when we talk about from 1120W, it's really important. Once again, I want to insist on that, is that you always have to pay attention to how you can have a third party kind of help you out. It's one of those things where what we have seen in our research is that a lot of companies actually plan their tax payments during the year. You do not want to wait at the end of the year to start thinking about your tax planning and your estimated tax payments, because remember, those tax payments are done on a quarterly basis, so it has to be an ongoing sort of brainstorming session, if you will, to sort of know exactly how much you owe the IRS and when you have to deposit the set amounts. Remember, for calendar year corporations, estimated taxes are due April 15th, June 15th, September 15th, and December 15th. So you have a clear idea what's really happening here. And one thing I also want to say here is that you need to understand it's one of those things where you got to be in a situation where you are constantly making sure that you have the right information. One thing I want to say here is that you have to also make sure that you, like, if you have let's say when we talk about corporations, remember, if you have shareholders, you have to make sure that whenever payments you make to those shareholders also have to take into account the fact that you are going to need cash later on to pay the company's taxes. Because when we talk about corporations, we have double taxations, right? So even though you are paying taxes on the income that the corporations is generating, the shareholders also have to pay income later on when they file their Form 1040. Now, why is it important? It's important because if you have a corporation that's owned by, like, if the shareholders are also the owners of the corporation, that means the cash flow is within, quote unquote, the family. And so that means that cash that goes to the IRS, for instance, is cash that doesn't go to the shareholders in terms of equity distribution or profit distribution. So that goes back to what I said earlier about strategy, like your tax planning strategy, so you have a clear idea what kind of cash inflows you have versus cash outflows. One thing I want to say before closing on today's conversation here is that it's one of those things where the way the most companies do it in this industry, most small businesses, they just automate everything. So you automate everything. So you go through your revenue, you go through your tax planning, and you automate everything. So basically, automatically on April 15th, there was a wire transfer that goes to the IRS. On June 15th, the same thing. September 15th, the same thing, and December 15th. So you do not want to even think about it. And you do a reconciliation at the end of the year to see if you overpaid or underpaid. And hopefully you would have overpaid. Thank you so much for your attention. I really appreciate it. God bless you. Let's quickly do a recap here. So in today's conversation, I gave you the overview, and then I give you the steps you need to really go through to fill out Form 1120W. God bless you. I'll see you next time. Until then, remember, stay marvelous.